Welcome back to Market on Close. Let's go through some of the options, data, and flows with Mr. Kevin Green, our senior markets correspondent, joining us for a look to start off the week at the key levels. Anything stand out immediately, KG?
Well, it's boring today, Oliver. We don't see a lot of volume pretty much across the board when you're looking at the SPX options, and that kind of mirrors exactly what's happening in the equity market, so not surprising here. But when we are looking for the levels for the week, it can provide you a little bit of an update and something to actually kind of keep your eye out on, and it's going to be that JPMorgan collar. We'll actually start there. JPMorgan has a couple of different hedge equity funds where they actually hold physical, obviously, stock, and then they sell upside calls against it, and they also sell out of the money puts against it as well. And we are coming up fairly close to the upside calls here. They are looking at the 5750 calls. Those are expiring end of month, so September 30th. That's actually going to be on a Monday, but this actually could provide us a little bit of pressure to the downside here. Now, those dealers are going to be long those calls, Oliver, but as they get kind of closer and closer, they're going to still try to stay delta neutral. And you're sitting at around $20.8 billion in notational value for that position. So that's probably going to be a little bit more of a bigger wall than what we usually are expecting here in the market, and that's just something to keep your eye on. Now, that doesn't mean that we can't get over that hump, right? If we have the economic data to support it, if we have the equity flows to support it, but I'm just saying if we have a day like today where there's pretty much no news or no excitement on economic data, it's going to be very hard to try to push through that without a strong catalyst here. 5,700 once again continues to be a critical area of support that we want to be able to hold in the near term. Kind of got close to that here today as well. And then on the negative gamma, 5650, and then I always highlight, or I'm highlighting right now, the 5600 as your sell-off trigger, meaning if we go below 5600, we could see a significant gap to the downside. You're talking about 150 to 200 points to the downside, just based on that structure alone. But today, once again, boring. But keep your eye out on that short call that they have to the upside there. That's a pretty decent wall, and actually it's around 80% of the total interest there. They hold around, what, 32,000 shares, give or take. And the open interest right now are 36,200 shares. Open interest at that strike right now is 45,000. So they're a significant chunk of positioning at that level.
All right. So if we start hitting through to 57, 70 or so, then we could get a nice little squeeze going on.
Yeah, definitely. And actually, once we get past Monday of next week, they're going to put on a new collar position. You actually probably start seeing the rolls happen on either Thursday or Friday, and getting others to really shadow those rolls, because that does happen a lot too. What that will do is alleviate some of the near-term pressure to the upside. So they're going to roll up, they're going to roll out, and that'll once again take that kind of gamma wall away from us, and then we should have a little bit more breathing room to the upside to be considerate of. Now, once again, this is not the only thing that's going to hold the market back. I don't want to scare people. And actually, when you're looking at the notational value of exposure there, it's not that large, but it is something to be mindful that there is still some positioning there. But yeah, we need to just have some economic data or some commentary coming from the Fed to break us through on some significant volume in order for us to kind of gamma squeeze to the upside.
Okay. All right, so we've got a good setup here, basically. I mean, if we just kind of can keep the grind going, to come back to our main macro point at the top of the show, slower rally versus blistering one, when you've got a few of the tech names muted like today, could be just fine. Because as long as we just keep going north, the kind of speed that we go at, sure, can make some fun trading. But as long as we keep going north and kind of pushing out dealer positioning further, it's just that's how it works, basically. It's like kind of 101 up and to the right.
Yeah, exactly. I mean, we are still making higher lows as well. We haven't broken this channel line that we've been forming for the last, let's say, 2 days or so. Now, we have stalled out, but that doesn't mean that it's ultimately bearish. And I think you're exactly right. The more that we see the rolling up of call positioning by institutions, the better and more favorable it's going to be. Now, on a volume standpoint, the area of resistance here today is going to be 5720, which we are literally trading at that right now. This is going to be an interesting one, because I did not see that much flows above that. 5725 was pretty much the next level to see. So I'm not sure how much of a squeeze we can have going into the close here today, but it looks like the market's trying to make a little bit of an effort. Balance area for the market right now is going to be 57.12, meaning dealers are going to be net neutral there. And your negative gamma area is going to be 5,700. You'd like to see us bounce off of that. Once again, I don't see enough flows here to really kind of create this melt up scenario of 20 points, 25 points over the next 20 minutes, give or take 23 minutes. But anything can change on a dime. And if you get some optimism, that could be a catalyst move for the upside. And actually at 1:30 Eastern time today, Oliver, we did see a huge spike when it came to long call positions as well as short call put positions. But it doesn't seem like we had any follow through that coincided with that. So that's what we're looking at for flows for today.
Okay. All right. VIX volatility as far as like what to expect, down below 16. We're drifting below long-term averages for VIX. That feels somewhat symbolic too about the power of the steady grind.
Yeah, I would agree. And actually, if you kind of look at some of the vol risk that you have, obviously with that JPMorgan call we were talking about to the upside, and then also the commentary coming out from Chairman Powell and Yellen on Thursday, vol is actually pretty cheap. If you're looking at the at the money straddle, you're looking at around 65 points between now and Thursday, and we've had better days, intraday swings than that. So if you are a little bit concerned about maybe things ahead or any type of black swan event, vol is relatively cheap on a seasonal basis, and you could be able to go out on the curve in order to be able to hedge. I know that you had a conversation last week with Jim Carson talking about the election premium, and you know, it's still not there. Vol is cheap for the election right now. So I would agree with him on that front there. But we don't have like a huge vol spike being implied in the options going into the election, even though the curve is still disjointed on a relative basis.
Okay. All right. Well said. Nice reminder there of what's on the horizon. Thanks, Kevin Green.